U.S. stock markets are down amid the fear that the coronavirus will continue to spread beyond China's borders. But what does this mean for big retailers? Joining us from Washington, D.C. to talk more about all of this is Steve Lamar, President and CEO of the American Apparel and Footwear Association. I appreciate your being here, Stephen. And I think the big concern that we want to ask you is, will retailers who might be having supply chain issues, let alone getting product to the United States, have to raise prices, or are we already seeing that, or is that not in the cards?
Well, the thing you have to know about what's going on with the retail community is, job number one is making sure that their workers, their associates are safe. They're doing everything they can to make sure that as factories start up, they're following all the medical procedures, making sure that their employees are, following the recommended procedures, whether it's quarantine, travel, having enough face masks. And that's really affecting the supply chains. Factories are starting up. Factories are beginning to make shipments. They are beginning to ship to the U.S. But as they're doing that, they're not at full capacity. And the reason why, frankly, is because they're operating out of an abundance of caution, making sure their workers are safe.
So, Steve, are we seeing any kind of supply chain shifts on the part of your members where they're able to? I mean, we heard earlier from more of a macro strategist who said maybe the larger U.S. companies have a little bit more flexibility. They can be more nimble in this kind of situation. Are you seeing that play out as of yet, or are your members waiting?
Well, I think we've been seeing those supply chain shifts for a number of years now. Certainly the trade war accelerated that shift out of China for companies to use sourcing and production hubs outside of China, whether it's Vietnam, Cambodia, Indonesia, other countries in Southeast Asia. We just had the U.S. MCA approved, so people are looking at Mexico and even in Africa. So there has been a lot of diversification in apparel, footwear, and even travel goods outside of China. I think coronavirus is probably reinforcing the need for a good, diverse supply chain.
On that note, though, China has been an exceptional growth market for so many companies, and we've seen it really grow as part of, the world GDP, its share of the world GDP. So does this knock them off, the ranks, and does it knock it off as a market for a lot of companies in the future?
No, I don't think so. China is going to be an important supply chain partner, both as a place to make product as well as a place to sell product. It's one of the fastest growing retail markets on the globe, and a number of companies are selling into China, as well as producing in China and selling into other markets, and even producing materials that they then sell to other markets, which are then sold to the U.S. So no matter how you look at it, I think China remains an important supply chain partner. People will be looking to diversify. I think supply chain, professionals, which are really on the front lines of this, they're doing what they can to exercise various contingencies. They are prepared for this. They game out a lot of different scenarios, whether it's port strikes, the trade war, and now coronavirus. So I think this just plays right into that those activities that they've been working on, those different scenarios they've been working on for a number of years. And we're going to see that continue, I think, for some time.
Steve, I want to just hone in on the sales piece, stripping out the supply chain piece. I think China is the second largest country by revenue on the S&P 500. U.S. companies sell $220 billion worth of goods to mainland Chinese consumers every year. So to what extent do you think that potentially now a downside impact to some of these retailers, and a serious downside impact, might actually provide ammunition to some of the companies to be able to suggest that the trade war has actually done long-term harm to the U.S. economy?
Well, I think we don't need more ammunition to know that the trade war has done long-term harm to the U.S. economy. I mean, anytime you tax, U.S. consumers to try and make things different in China, that's not going to work out. I mean, the trade war has just simply meant more costs, more tariffs, even price increases passed on to U.S. consumers. To your question about retail in China, as you mentioned, China continues to be an important market. I think one of the things that we've experienced with the coronavirus so far is, a lot of stores didn't open. Those that did open didn't see a lot of traffic. And as a result, there's a lot of inventory buildup that may not be the right seasonal merchandise. You've got a lot of winter clothing. Pretty soon it's going to be spring in China. So one of the things companies are looking at is how do they swap out that inventory and get the spring and the summer inventory into China. You don't quite have that problem in the U.S. We actually shipped a lot of our spring and summer inventory before the Lunar New Year. That's very typical to ship those seasons before the New Year. And as a result, we've got a little bit of a cushion as we enter those seasons into the U.S.
All right, Steve Lamar is the president and CEO of the American Apparel Footwear Association. They represent 1,000 of the world's largest brands and retailers, and we appreciate your being here on The Move.
Thanks for having me.